Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Monday, June the 18th, 2012. Well, a continuation of the trend to the upside today. We have a candle that's made a higher high and a higher low. Previous day's candle, we had a very strongly bullish candle, a Maribozu type candle, white candle, where the buyers took strong control of this market and were strongly committed to taking this market higher. Today, we've continued that trend to the upside, the market making that higher high, and we've seen the buyers close up towards the high of the candle, with them closing in control of this market. We have a longish shadow on the bottom of this candle, and that now highlights the importance of the 1333 region. We saw here previously how this region around 1333 was an area of resistance, and now we're seeing it act as support, and that's very important moving forward for this market. That's a very, very important level for tomorrow's trading. Now, just looking at this candle as well, we have a small body, and that does raise some doubt about continuation of the trend to the upside. Previous 2 days trading, we had very large white bodies, and all of a sudden now at the end of this strong uptrend, a white body. It's very similar to a hanging man type pattern. We have a shadow on the top that's a little bit too large, but quite similar, where we have the small body and the long shadow on the bottom of that body. The long shadow represents price rejection from the 1333 and the sellers losing commitment, but the small shadow, the small body represents the buyers making only a small amount of net bullish progress, as opposed to the previous 2 days where they made a very large amount, and that's what raises the doubt. Now, the market interacted with this area around 1347 that I've highlighted previously as an area of previous support, and now a previous resistance. In the case of today, here we have the market finding support around that area and then the breakout. Today we've seen price rejection from that area, so that's an important level for tomorrow. So with this hanging man type pattern, not a typical hanging man pattern because of this shadow on the top, we do need to watch the low for a potential lower high and lower low, but not terribly likely because of this strong support that we should see around 1333, but the potential is there. Now, in terms of patterns, previously we were looking at this wedge type pattern that the market broke out from with a bullish breakout, and we saw continuation of that trend to the upside. We had the prior move into the pattern, and here we have the uptrending action, then the pattern, and then the breakout. And the way that we measure the target is called the measured move, and we measure the extent of the trend moving into the pattern and measure that from the breakout projected up, and that gives us a target up around the 1400 level, around 1393. For the previous day's trading, we also had completion of this complex head and shoulders pattern, and here we have the left shoulder, the head, and the right shoulder. We've got 2 troughs within this left shoulder and 2 troughs within this right shoulder, so it's a complex pattern. But the important thing is that we had the close above the neckline and a bullish close, which gives us a little bit more confidence about this pattern and completion of the pattern. The target for the pattern is measured by the distance from the bottom of the head to the neckline projected up from the breakout area. And by the way, I called it a head and shoulders pattern. It's an inverse head and shoulders to be correct, and that gives us a target just above the 1400 area. So with these two patterns combined, we have a projected area roughly around this 1400 area, plus or minus roughly about 5 points or so either side. Now, we do have strong resistance on the way up. Obviously, this 1347 is a hurdle for this market tomorrow. If we do break out above there, then 1356 is an important level, extending up to 1370, and then we have potential. The longer we go on, the potential for interacting with the cloud is greater. The cloud is a dynamic area of support or resistance, in this case resistance, and it will be moving down to lower levels, so that's important. So not too sure that we will make the target around this 1400 level. If we do see some good solid upside momentum quickly, we could see the market break out above there, and that will be an important event if we do see a bullish breakout above that cloud, but we shouldn't try to preempt what the market's doing at the moment. In terms of the Fibonacci extension, and what we're looking at here with this current uptrend is a relationship between that and the previous time that the market was trending up. And the market took out the 100% level on the previous day, and now for today we've rallied up roughly towards the 161.8% level, and we're seeing price rejection from there. The 161.8% is at 1351, so that has given us a fairly good target, and this price rejection from that region does suggest that there is potential for a change of trend. And also the Fibonacci retracement of the previous downswing, and now we have the expansion of that retracement past the 100% level with that bullish breakout, and we do have a level around 1353, and we're just a little bit far away from there. There is potential for the market to trade up to there and potentially find resistance and come off, but with this type of candle that we're seeing at the moment, we are seeing a failure of the buyers to support this trend to the upside in terms of the very small white body candle. Now, in terms of Ichimoku, we have a market that's bearish in the long-term time frame by trading below the cloud. The market is trading a fair way below the cloud, and that's one of the reasons why we could have some confidence in these patterns, because we weren't going to get any strong resistance from the cloud for quite some time. Now the market is moving closer to the cloud, and the cloud is moving down to meet it, so the longer we go on, the more chance we have of interacting with the cloud. In terms of the time frames, in the shorter time frames, the market is bullish in both of those. We're bullish in the medium term time frame by trading above the Kijun-sen, the pink line, but also bullish in the fast term time frame by trading above the Tenkan-sen, the green line here. And we have also had a crossover of the Tenkan-sen above the Kijun-sen, which is a bullish signal in Ichimoku charts terms, but it's only a fairly weak signal because it has occurred below the cloud. We had the breakout above the Kijun-sen and a bullish breakout, which is a bullish signal, but once again a weak signal. But we have seen quite some appreciation over the past few days since that breakout. In terms of the ticker span, that's below the corresponding price action, so it's not confirming the bullishness that we're seeing in the faster time frames, but is confirming the bearishness that we're seeing in the longer time frame. So summing up, we have a bearish market overall. We're seeing short-term bullishness in the medium-term and fast-term time frames. The trend is up. We've had breakouts and strongly bullish breakouts above both of these patterns, which gives us good solid targets, but we are interacting with some strong resistance around 1347. The market doesn't seem to have the upside momentum that the buyers had over the previous 2 days. There is potential for a change of trend, but we do have very solid support down around the 1333 level.